It's the Real Money Show. We're ready to rock. The number 18778 silver and the website guildhallwealth.com. I'm your host Jeremy Wiseman. Joining me, Jerry Correa. Jerry, how you doing?
So good, Jeremy. This drink is great.
Okay, yeah, we've got our double espressos going for the day, so get ready. Get ready. We're going to be doing a whole lot of talking. Okay, so up for the show this week, we want to talk about some technical indicators. We want to talk about some big picture stuff for the precious metals. Obviously, an inflation update. We're going to title the show The Next Leg Up for Gold and Silver because I feel like, and I think you would agree, Jerry, that it feels like we're in a bit of a pocket here where the fundamentals, the currency collapse, the lack of faith in central banking or the currency itself is not quite there yet. We're getting there. We're moving closer and closer to that edge of that panic of, oh my gosh, what is the value of this dollar? But we're not quite there yet. And so we're kind of in this pocket where there's the exit door is still open. You still have an exit plan, which is precious metals. That door is still open, but what is it going to look like when it closes? So we want to talk about that. I'd like to spend a little portion of the show, and I haven't told you about this yet, Jerry, but I'd like to go through some scenarios of what it might look like if central banking collapses. You know, in 2008, they were on the precipice. They looked out into the abyss, as they said. But what would it look like if it just collapsed now? If we did get that lack of support for it, if people stop trusting the central banks.
We got to go there.
So we've got, let's just look at some scenarios and consider those from our positions, from our standpoint. Then we'll get Paul onto the show to talk about supply chain disruptions, how that's affecting the metals market, what we're having to do to overcome that right now in the market. And then we can get into a little bit of pricing on the metals as well. So let's get started. Big picture, where are we at?
Well, on the macro side, obviously, inflation is the big ticker, the big headline. The number one Google search term still is inflation and hyperinflation. Big picture today was the Fed's one of the board of governors. He spoke today, and we're recording on the Friday just before the weekend. Big concern if inflation gets embedded into wage demand. So, how are the people gonna, get paid more to keep up with the CPI, to keep up with pricing? The employees need to get paid more. And this is the big crux. How can you add more wage and continue to increase the wages if, you're not if the GDP continues to get suppressed and it's going backwards and we're seeing stagflation. So his concerns is inflation gets embedded into wage demands. He also says there's still a massive demand for stimulus. So even though you need it, he thinks that they should also accelerate the taper. So he's all over the place. And the macro picture is just this. There is no confidence. These Fed chiefs, these Fed members, they want to do it all, but they can't do it all. The fact is, you want to taper and still need your stimulus. You still need the punch bowl to the party, but you also have to deal with the inflation. And the inflation is running away. They're already behind the curve on the inflation, especially here in Canada. We're seeing inflation, but you haven't raised your interest rates yet. So we're well behind the curve, and that's the macro. That's the big setup here. And we're seeing, the technicals on the technical side, things are sort of consolidating right now in gold and silver.
There's so much happening all at once, and the thread through the whole thing is the Fed printing money. It's causing all of the issues in my mind. Now, you could say, well, there's subtleties around, right? Not everything is completely black and white. There's some gray. Okay, fine. But at the end of the day, the amount of money printing that's going on is causing a massive amount of these problems. Case in point. I put this up on our Instagram this week. This is from the Nancy Pelosi portfolio tracker, right? They have a whole feed. It's amazing. They put out some great stats. They put out this one. 40% of all dollars in existence were printed in the last 12 months, and the federal insists that inflation is transitory, right? So let's just play through that for a moment. They gave, the government borrows from the Fed. They gave out a whole bunch of checks. People are sitting at home. They're saying, why would I go and work when I can sit back at home and I've got a flush bank account, right? Makes sense. You can't get dock workers in California. So now you've got supply disruptions.
Right.
Why? Because you printed all this money. You force people to stay at home, right? Or they've now decided they want to stay at home because they're flush with cash and they don't care. You can't print money forever. I got asked that today from a customer saying, well, can't they just print money forever? Like, what's to stop them? Well, there's a finite amount of goods. The more money you print, the more you're going to have to pay for the same amount of goods.
Right.
Case in point. Let's keep it on topic, Jerry.
Yeah.
Gold and silver. You can only add to the gold supply, what, 1.5, 1.75 a year. That's it. You can't just turn on the light and double the gold supply. It doesn't work that way. We live in a physical world behind all the computers, behind all of the NFT stuff and, you know, the stock market going crazy. There's still a company behind that
Right.
that owes money to someone, right? So, you know, you still have to plug that in. Well, that takes energy. You plug in your computer, it takes energy, right? Where's that energy come from? Did they find a whole bunch of oil somewhere? No, they haven't found an oil in forever, a massive deposit.
That's right.
So peak oil. You just go, yeah, that exists. It's not conspiracy. Same thing with gold. Easy gold is gone. So it's only going to get more expensive for oil. Everything's only going to get more expensive. And then when they want to go into green technologies and all of this stuff, you got to produce that with fossil fuels.
Right.
Right? How many people have we shown on the show that said, you want to go green, that you're going to put so much pressure on fossil fuels, it's going to drive the price of oil to hundreds of dollars.
Yeah, you gotta pay
We're
for
seeing that now just because the money that's being printed.
Yeah.
Right. So again, it's all about the money being printed. It's going to more money chasing the same amount of goods. That's inflation. Anyone that wants to tell you different is trying alchemy on you.
Yeah,
it's just trying to alchemize. Well, no, it's a mysterious. No.
It's not a phenomenon here.
Exactly.
And about the scarcity and the scarce factor, and you know the chase for assets. This Fed chairman or the Fed governor that spoke today, one of his tweets was, "There is still a scarcity of safe and liquid assets in the world." He's bringing up a very important topic for us who are listening. He's saying that scarce is where you should be. There's a scarcity in the face of this mass amount of monetary stimulus and expansion. Why is there a scarcity of safe and liquid assets? Because they're scarce, and there's so much money flowing and chasing good assets right now, liquid assets, monetary metals. The time couldn't be better, especially now. Why is today such a good time to buy silver and gold? It's because they're available still. Day by day, week by week. We cannot say, I had a client that called in today and he's like, do you guys have any monster boxes, which are the silver maples, the yellow boxes? I'm just like, yeah, we do. We have about 6 or 7 in stock, and he's interested in potentially buying it 2 weeks from now. I said, you know what? I don't know if I'm going to have them available. And that's the reality. If you have the chance to buy it today or acquire those goods today, convert out of your fiat now and get your hard asset. Get that scarcity in your portfolio today.
And we'll talk about that with Paul, about how the scarcity, how the supply chain's working on the precious metals, and why is it that, okay, we've got silver maples this week, but we could easily be out of them by next week, right? You just don't know how the supply demand is going to be and what is it going to take to get new product in.
That's tough to forecast.
We'll definitely discuss that with Paul. If you want to get physical precious metal in your portfolio, it's quite easy. You just call the number 1-8778-SILVER and the website guildhallwealth.com. Everything at Guildhall is physical. We go by the motto, if you can't hold it, you don't own it. And so therefore, when something's physical like that, there's no counterparty risk. When you own physical gold and silver, again, the type of product that if you can't hold it, you don't own it. This isn't paper. That there's no counterparty risk. Anything can happen in the world out there, but you still own that physical product, right? No one else has a claim to it. That's the most important thing. So whether you buy it directly from us, whether you want to buy it and store it in a vault sub-account, where it's fully allocated to you. You are the sole owner of that product within the vault for ease of liquidity and security and insurance. That might be a direction for you. Or if you want to acquire physical gold and silver for a registered account like an RSP, TFSA, Lira, LIF, RIF, these are great places to put actual physical precious metals. And that's something that we offer here. And it's amazing because we've been doing it for 6 years. And it's still a surprise to many people to find out, wait a minute, I can actually own physical in their RSP.
Yeah, and another surprise is many people forget that we offer free gold. So for every 10,000 US that you invest, you're getting a surprise from Guildhall of 1 gram of gold. And this is one of those things. Small, it's a small gift, but it's something that differentiates ourselves from the rest. We love giving, and we love walking you through this entire process. It's a very short and sweet process which I think Jeremy and I have mastered over the years. So get in touch and get some physical within your registered plans today.
So coming up, we want to stick on the topic of just all this money creation and where does it lead and why are we in this perfect pocket of precious metals and what does the next leg up in precious metals look like? Again, the number 18778 silver and the website guildhallwealth.com. You're listening to The Real Money Show on Global News Radio 640 Toronto. Welcome back to The Real Money Show, the number 18778 silver and the website guildhallwealth.com. In the next few minutes, we'll talk about some technical indicators. We'll talk again a little bit about the big picture of precious metals, because again, we feel like we're in this just perfect pocket to continue to acquire precious metals. And the technicals are going to show you why we're still in that perfect pocket, but it's not going to last for long. And so you want to stay tuned for that. But first, let's talk about some scenarios, Jerry, of what it might look like if the central bank system as we know it collapses. Now, why are we saying that? Because as Catherine Austin Fitts calls them, the Mr. Global, they know that the central bank system pretty much ended in 2008. They've kept it on life support for the last decade plus.
Right.
Continued to print money, throw it into the market. How do you know this was all just a farce? Because they never raised interest rates and they just kept printing money. Mm-hmm. So there was no, well, now we feel safe enough, strong enough to get the patient out of bed walking on their own. It never happened.
Yeah.
The patient stayed in bed the whole time. They could never get back up to any semblance of interest rates in and around 5-6%. Now they're threatening it, of course. But I digress. So we know that this system is folding. Now, on the one hand, I'm going to set up the three scenarios at the outset. On the one hand, we have the Klaus Schwab reset. Okay, let's just start there. What do you make of that? You'll own nothing. You'll be chipped. You'll have a central bank digital currency. They'll just control from there and they'll roll you into that. What do you think the appetite actually is for people to say, "Oh, I can't wait for the central bank to own me"?
Well, when you're revealing your cards, your hand, something tells me you're rushing things through. So this is something that the World Economic Forum brought to the table, and they're revealing their plan that they do want to move into this consolidated, debt jubilee, digitization of literally everything and lack of ownership, the whole Uber mentality and the Airbnb mentality of you don't need to own anything. You could just rent everything. And, we're seeing experiments like this happening in China. There is a move towards digitization. For example, there was just yesterday what was reported at the World Gold Council. They had an interview with the OMFIF, which is the Office of the Monetary and Financial Institutions Forum, and they were talking about the future of gold and the implementation of CBDCs, which is central bank digital currencies, and what this would look like for the future of gold. And there was a clear divide between having just a fiat digital currency backed by the central bank, with a basket of currencies. We already have that. The
right.
SDR, the special drawing right from the IMF, it has already been in existence for decades.
Right.
It's nothing new. This one's just digital. So they actually talked about an expiring yuan. So there's a Chinese currency called the renminbi or the yuan. And they've experimented with negative rates. And this is how they're going to bring negative rates to fruition. It's by having these type of digital currencies. And further, they want to stimulate growth and spending by offering expiring money.
Right.
So they're going to give you a digital currency that you're allowed to have with carbon credits and you're allowed to spend, but they'll expire at the end of maybe a week or two.
So what you're saying is you can see the implementation or the movement towards the implementation of we'll call it the Klaus Schwab reset because negative interest rates forces people out of cash.
Correct.
And then what was the other one you were just mentioning? Oh, expiring money. So let's give a handout, a carrot and the stick, if you will. You'll get this free money if you're willing to spend it now and get into the system, right? So it's a giveaway, right? To get people engaged and adopting the system.
Yeah, and if you don't adopt, they can just fast track your expiration date or just turn your currency into null and void.
Now, that's something actually, speaking of the digital currencies, I think that's something that the Bitcoin community can see through as well, because the Bitcoin community looks at it as a sovereign, what they have as sovereign currency, whereas a digital currency, which we're on now. We have the digital currency now, right? Everything you do is digital. You tap your iPhone or your iWatch onto things and you pay for stuff.
Alipay, yeah.
But the difference is that when it's all controlled right from the central bank and you're essentially getting rid of banking, now they control you 100%. They see exactly where every dime is spent. And that's probably the big concern. Whereas the crypto side of things are looking at that saying, well, that's not what we are.
Yeah.
We're sovereign. We want the independence of that. So I think that, just in kind of quickly going through this conversation, I think we can say that the Klaus Schwab reset, the Mr. Global reset, is not good for Mr. Citizen.
That's correct.
It's going to be very, very bad, and it essentially is going to amount to slavery.
Yeah.
Now, we could go into discussions about what is this whole lockdowns and COVID and the collusion between big pharma and all of that, and see how that plays with the central banks. One day maybe we'll get to watch that documentary. The second one, which I think is kind of the most interesting in a way, would be what I would deem the organic reset. Now, remember a couple of weeks ago we were talking about how banking in the United States worked in the 19th century. You had all the banks are independent. There's no central bank, right? And each bank is issuing its own currency, right? Now, they have to back that currency. If someone's going to go into that bank, you have to say, well, why should I use your currency? Right. The bank says, well, we're backed by gold. We have a fractional reserve of gold, and here's the audit for the gold, and there you go. You can use our currency. I like this idea a lot in an organic sense of each bank issuing its own currency, but it's regulated from the government to say, you have to show that you're backed by gold. And then who cares if there's thousands of different currencies? It doesn't matter. It's no different than Europe in the 90s, right? When you had the lira and the franc and the this and the that. Everyone was used to changing up currencies.
Yeah.
So it'd be the same thing, except with 5G and whatever, it's all instant. It's instant.
Yeah.
You can you'd know exactly what you're converting between currencies. And the best part is they'd probably all be stable because they're all backed by gold anyway. Right? So that's just the organic side of things. Would you say that's happening in Venezuela a little bit? I mean, they're slicing off gold to pay for things. They're also mining for gold individually and then taking the gold and buying the crypto to buy things in their daily life. In other words, it's like a dual currency there of gold and crypto. I don't know if they're still using U.S. dollars, but in the 90s when countries in South America were having issue, it was all, well, get into U.S. dollars so that you can protect what you have. I don't think people can do that now because the Fed's been printing so much of the dollars. That's not a safe haven.
No. Right?
They have to do something else. And so there's crypto and gold. But I'm going to digress just a little bit further.
Go on.
Just one little
more
more
where
thing.
You're going with this.
People would ask me about crypto all the time, and I just say, listen, I am not an advisor. I don't know. It's a little esoteric for me. But at the same time, I say this. I think personally what's great about it is it can't be undervalued and it can't be overvalued, because I don't know what the real value is, and I don't think anybody does. And that's the beauty of isn't it? Is it can never be under, it can never be over, because no one knows what it is. Egon von Greyerz came out with an article this week, and he was kind of going scorched earth on Bitcoin, and he was saying the exact same thing. Can someone please tell me what the natural value, innate value of Bitcoin is? Because he has no idea. So he's like, it could go up 3 more times over, because we don't know what the value is. And if you don't know what the value is, isn't that sort of a perfect analogy for Fed printing money? Doesn't that encapsulate exactly where we are?
Where they speak.
When you don't have your currency backed by something where you can say what the true value is, that this many ounces of gold should buy a house, this many ounces of gold should buy a toga and a pair of sandals and a belt and a custom suit. If you don't know what these things are, when you ask people what's the value of the Canadian dollar, they say, oh, it's 125 against the US.
Yeah.
Okay, what's the US worth? You've got two ships in the night just tied to each other.
Lost.
Cloudy night at sea, and now the storms are raising. What is it worth? Where are you? You don't know.
Yeah.
And that's
the anchor?
That's the problem. So I'm saying that cryptos are a reflection of the times we're in. If you're going to print money, no one knows the value of anything.
You can, for things like Bitcoin, you can have a finite value of this Bitcoin, just like finite value of gold as you're mining it. However, the smallest increment that we go in gold is a gram.
Yeah.
The gram is what the Venezuelans are using on the street to buy bread and necessities. For Bitcoin, the decimal place can be moved. We processed a few Bitcoin transactions this week, and the fractions of Bitcoin can just keep going and going and go. So you're not building outwards in supply. You're just dissecting what you have even more and more and more until it becomes what? Where is the store of value?
Yeah, you cannibalize the divisibility of the quote unquote money, right? I call it currency, but
It's smart,
yeah.
But I think investors and people who are concerned about what is the best store of value are concerned about this because Bitcoin hasn't gone through a crisis, a real crisis.
It's been around for 11 years, not 5,000. So the gold crew that are going to say, well, it's not been tested, they've got 4,989 years to go before we can properly assess in terms of that argument.
But for our listeners, we have crypto as well. So we're not on just one side. We believe in layering and diversification, layering and various means to ultimately offset the damages in fiat currency.
Yeah, it's about getting out of the banking system because we don't have much faith in the current currency, and we're going to talk about that. What happens when faith flies out the window? And so you have to diversify a bit. Now, for me personally, I don't want to go too far into it, but the technology is great, right? Distributed ledger technology is great, but it's the other stuff that is a bit questionable. Okay, let's talk quickly about the third one because we're running out of time on this segment. The third one is the Nicera Jacera thing, right? So that's really the other option. You've got we would encapsulate it as the Klaus Schwab is the black hats, the Nicera Jacera is the white hats, and somewhere in between is an organic mishmash of we've cast off both or we cast off one, the other one didn't exist. We don't know much about this other concept. You can look it up on Wikipedia, which I think is constantly editing things and changing things and being part of the fact checker culture. But all we know is that it promises to back everything by gold, and that the price of gold and silver would obviously have to go sky high in order to do this, to get it all set up. Very briefly, Jerry, 30 seconds. What do you know about this?
Well, it's constitutional, and we have to remember that anything that was drafted by the Constitution or the Bill of Rights is as we grow day to day here today, we are learning how perfect this act is, this Constitution is. So remember, money needs to be backed by something tangible, and that is your wealth insurance, your gold that's divisible, portable, durable, recognizable, scarce. And to conclude the World Gold Council's report with OMFIF, they introduced the mere thought of, yes, let's unify this national digital currency with some gold, and your nation better have gold. I was looking at the reserves for Canada. We have 0. So Nicera Jacera, it's an act, you could look it up. It's a recovery act, and it's really just a restoration of, we suspended the gold standard. Let's reinstitute it. Remember, it was never abolished. It was never nixed. It was suspended. So we can head back to a standard and, we bring back the credibility.
It's like what Reagan said. There's nothing more permanent than a government temporary measure.
Oh, goodness.
Right?
Yes.
That was Nixon. We're going to lift the gold standard temporarily. Jerry, I want to get to the technical things that we were going to talk about. I watched a great video on Arcadia economics from Rafi Farber. He did such a great job. He hosted it by himself. Wonderful. I'm going to get it out into a newsletter over the next week. I'm going to just talk about the one aspect, one chart out of all of them that he showed. You know, he talked about the fact that we've come back to the silver 50-day moving average since the summer. He talked about silver in real terms and showing that it's just touched the bottom of the upward trend, meaning, you know, in 2011, we were way off the trend line. We're just touching the trend line now, which is a huge
bounce off support
to say, okay, now we know where the next leg is. We just hit bottom on this. But what the most interesting chart for me that he brought up was silver is money when consumers get scared. So he brings out 1980, he brought out 2011, and he brought out 2020. Or sorry, 2019.
Okay.
Because we know what happened in March of 2019. Everyone got really scared about what was going on with the money. And once they started printing the money, it was like, whoa, now everyone's woken up. His premise by these charts, and there's 3 examples up until now, is essentially when consumers get scared, when the consumer price index goes up, people start worrying about the money and they scramble. So they're not scrambling just yet. We see it every day. We're seeing a scramble, but it's not the mainstream public scramble.
They're saying calm down.
This is still the savvy scramble, right? Savvy scramble. We should call that the title of the show this week. So that's what you're seeing. But the consumer price index is not showing that people are scared yet of the collapse of the money system. But when that starts to happen, when people get scared about the money, watch out gold and silver. And I would say we're anywhere from a week to several months from seeing this full-blown effect.
Well, for the technical landscape, the gold is above the $1,800 mark. Support would be around 1825 to 1830. Over the last week and a half, we saw obviously some really good gains from silver, which bottomed in October, up to 1865. So we're seeing a little bit of a retracement, some exhaustion. But even in spite of a strong U.S. dollar, we're seeing dollar across the board strength against the Canadian dollar and many other various currencies. We're still seeing the resilience in gold despite U.S. dollar strength. So we don't see that negative correlation right now, although, the dollar, on the other hand, looks overbought. This can continue once the inflation data comes back. We're seeing next week, Wednesday, November the 24th, day before Thanksgiving, we got GDP coming out of the States, and then we have core price index, so inflationary figures come out next week. So from now until then, I think this is a good time for precious metals buyers to pick up while we have some loonie strength. We don't know how long that's going to last for. And then FOMC minutes as well. Could be a good time next week, early next week, to be buying your metals. So those are the technicals that I see here. So this is a good opportunity to be buying off the dips.
And another technical one, again, from that video I was just mentioning, is how much physical silver's been drawn off the COMEX over the last year, especially since the silver squeeze, which remember was in February. The COMEX had back then a little over 150 million ounces, and they're down to below 100 million. So there's been over, I think, according to him, it was something like 50 million ounces plus have been drawn off. Now,
what was the time frame on that?
A year, since February.
50, wow,
so
that's huge.
So while on the surface it doesn't look like much is happening, market seems to be quote unquote consolidating. Underneath that, the physical is being drawn off the COMEX at a rapid rate. And so what he was suggesting during the video is just keep it up, keep buying, right? Rafi was just saying, you gotta keep stacking because it's working. You're gonna keep pulling this product off. They gotta get it from somewhere. You're outstripping supply consistently, and at some point, the rubber's gonna hit the road, and this thing is just gonna explode. And we've seen it explode several times in the past. This isn't la talk. It's happened before. It will happen again. And so we're very excited.
Yeah, any type of silver, whether it be silver maples, tubes of 25, you have monster boxes. We brought in a new kilo bar Nadir, which is a 4.9, beautiful product with serial numbers. So that's going to be, it's LBMA approved. So it's going to be RSP eligible. Get those in your RSPs. We do have 100 ounce bars. Any type of silver, we're doing the job. We're taking the physical out of the market and we're allocating it, titling it to you with serial numbers. And this is exactly what needs to be done. Put the pressure on the COMEX. Put the pressure on the futures markets. The Basel III rules indicate that they need the physical. They need the physical to create these futures, these future instruments, these financial instruments, which flood fake contract supply, 5,000 ounces per contract. So let's do our part. Let's continue. We're going to be thankful for the ounces that we do have available. So get in touch with Guildhall Wealth. This is your moment.
The number 18778 silver and the website guildhallwealth.com. Joining us now, Paul Wiseman. How you doing, Paul?
Good. It's been a long time since I've been on the air, I guess. Somebody has to be busy looking after everything. It's getting tougher and tougher and tougher.
Exactly. Getting the supply chain for precious metals. Earlier in the show, Jerry and I were just talking about that, silver maples. Yep, we've got them this week, but by next week they could be gone. And what would it take to get more, just on this product alone, what would it take to get more maples in the market?
Well, there's not a lot out there. They're also making 2022. So to get 2021 is a little lean. The spreads have gone up just between the bid and the ask. On the spread is $4.75 spread. That's US between buying silver maples. Eagles are actually $8, if you can believe it, between the bid and the ask, and they're very, very scarce. And one of the reasons, the people that refine silver and gold, they have what is called blanks. They don't produce or finish product. What they do is make rounds. They're called blanks, and they're 1 ounce blanks, and they get sent to all the different mints that then basically stamp, whether it's a Canadian mint or a US mint. That's what they do. So there's a shortage of blanks, which makes it tough to start off with. We're looking at deliveries in silver and gold, and this is a Royal Canadian product as well, maybe 3 to 6 weeks out. So when I'm booking, we've got a double whammy. We've got currency, FX, this week a lot.
Because it's getting more volatile. The dollars are jumping up and down.
Basically, there was a 3% swing on the Canadian to the US dollar. Mm-hmm. So we've got to take that into account. We prepay for a lot of our merchandise. That way we get quick deliveries rather than someone who's going to get order product and it becomes a receivable to the company. They like customers that pay for their product, so they're happy to ship it. There is so much product as well, just generally in the retail and wholesale business, that's sitting offshore right now in containers that they cannot land. Now, this is just-in-time inventory, which...
Are you talking about metals?
No, I'm talking about just regular product right now. And because I'm going to swing back into the metals. Metals are in the same category as well, because the cost of shipping gold and silver... The prices
they get caught up in the logistics and all that.
But the prices have gone crazy. So everybody's looking for the cheapest way to ship.
Right.
So if and insurance, as prices go up, the value of the product that you're shipping. So if you look at the containers, all those people that are using just-in-time deliveries, there is no more just-in-time. So what's happening, you have to basically buy 5-6 times as much inventory because you don't know when you're going to get your next delivery, especially out of China if you're in the retail business.
Right.
So 5 to 6 times inventory, who's going to finance that for you? The banks don't want to finance inventory because they figure if there's a container of clothes and that company goes out of business, they're going to get 10-15 cents on the dollar. So they're not interested in 100% financing. So there's lots of reasons why product is sitting offshore.
Wait a second. You're making it sound like this could be a strategy on the part of like a Walmart to squeeze out the little guys because they can afford to buy 6 weeks out.
Yeah, Walmart has already done it. They've already prepared. They've loaded up their warehouses with product. Not everybody.
I'm not dissing Walmart in particular.
No. But they've done extremely well in this COVID period.
Right.
They've made lots and lots of of money. They put their money into inventory because they know you've got people are going to buy. They've been sitting at home. If they're not working at the office, they've been collecting payments from the government. They haven't been out entertaining. They haven't been going to restaurants. They haven't been going on trips. They've got money. And they know Christmas time, people are going to let loose and they're going to spend that money. And the money's going to be spent as well on jewelry. We're seeing actual jewelry starting to pick up, and I'll talk about that in the next segment.
Yeah, let's pick it up on the next segment. The number 1-877-8-SILVER and the website guildhallwealth.com. It's The Real Money Show on Global News Radio, and we'll be right back. Welcome back to The Real Money Show, the number 1-877-8-SILVER and the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. We only do physical. Now, Paul, just before break, you were basically saying that the supply constraints means that the big buyers who can buy way out into the future may be taking advantage, or they can continue to maybe guarantee some product coming in. But we're seeing it as well in the supply side of precious metals. How long do you think we're going to see this supply constraint in precious metals? Do you think it's just a logistics thing, or do you see it as a supply issue, or do you think that it's because the prices are too low and we're buying 3 times as much silver than we really should be?
People are buying gold and silver. Let's face facts. There is a limited amount of product and a lot of buyers. The wholesalers, whether they're sitting on product, whether the banks are buying back paper, or lowering the price of paper so that they can buy the physical and enjoy the windfall that's coming. And there's going to be a huge windfall because everything is tightening up.
What do you think? Do you think J.P. Morgan actually has this windfall amount of physical silver somewhere? What do you think?
My crystal ball says yes. I think.
You think they've been pulling it off? They know it's like
their fingers in every pie. Whether they're controlling. Manipulating. I mean, they've all been to court for manipulating.
And busted and paid their fines.
They pay the fine. Nobody goes to jail. It doesn't matter. And it's back to square one and back to the party.
Who do you think pays more fines? For pharmaceuticals or the banks?
They're just as bad.
Just kidding.
Banks paid $50 million this week.
You're talking about, financing inventory.
Yeah.
Banks don't like financing inventory. Unless they can liquidate that inventory. They don't like financing even real estate. I mean, if you've got a home and let's say it's worth $2 million and you want to get a loan against it, they're calling an appraiser and they appraise it at 1.5.
Yeah.
Mm-hmm. They want to leave themselves 25% just in case things go a little bit upside down.
A little buffer.
I think prices are going to go up extremely high. And it's going to be the people that have the buying power, the companies that have, like we can get the allocation of gold and silver because every ounce of gold or silver that we sell, we reorder as we sell it.
Right.
So we've got we've got 3 inventories. We've got a basic inventory, we've got an inventory going out, and an inventory coming in to replace it. So every order that comes across our desk, we're filling. And you'll notice, or people are actually noticing, on our website, we only have a minimum amount of products, a minimum amount of SKUs. What's the point of putting up 100 different items if you can't supply them? So every item that we have up on the website is in stock. It's available to you. If it's not, and we tell you it may be a week, it's on order, it's going to come in, we will tell you that.
And what's funny about that is, I don't know if you know about this one, Jerry. I think you probably saw it throughout the office, but I was talking to Paul saying, we could probably do with some more SKUs. Why don't we put some half-ounce gold maples and quarter-ounce gold maples on the site? And we went back and forth and said, yeah, okay, let's order a bunch. Literally the next day, I got a phone call, someone looking for half-ounce gold maples and the quarter-ounce, and we sold them. And so we don't have them up on the site because
just wiped out.
Because we got wiped out before we even got there. And that happens on a lot of products.
Get delivery. That's the purpose.
Right.
I mean, if I order 500 1-ounce gold bars, and they come in. I say, fine, they're up on the site. When they get a little, I mean, I'm replacing those all the time. Somebody sells 25 or 50 or whatever, an order goes in for that same product that
right
we
away.
sold at that price. Now, what happens when this gets to a stage where you can't get product anymore, where they're saying to you, I can't, I mean, it happened to me last week. One of my biggest dealers, I went to order 500 1-ounce Royal Canadian Mint bars from a wholesaler, and they said, I can't give you a price because we don't know when we're going to get them, and they don't know what they're going to pay for them.
And the other part of it is it's one thing to say, okay, here is the general amount of business that we see coming in right now, right? It's sort of like a chef can say, I'll get this much filet mignon, right? And by the end of Saturday night, you go, we're out of this, we're out of that, right? You go into a restaurant late on a Saturday, there's going to be things that they're out of. That means they've organized it well, right? They've managed it well. How many dealers, very quickly, because we only have about 30 seconds left, how many dealers do you think would be ready if we had like another 2019, March 2019 or February 2020 event where all of a sudden everybody and their brother, sister, and uncle is buying? All of the dealers, including us, would not be able to handle that business.
No, I mean, we can, if I can't get product, we take it off the website. It's as simple as that. You know, right now there was problems getting 10-ounce silver bars. We had a lot. We literally got wiped out. We've just put back, I think, Royal Canadian Mint.
Yep.
I'm waiting for a delivery actually next week of PAMP 10-ounce. They promised me a delivery. Kilo bars, exactly the same thing. I mean, we just don't know when it's going to be shipped because the wholesalers and there's only basically a few wholesalers because none of the people that mint the product want to deal directly with the public. They don't want to mess around with 2 gold maples and bill someone and worry about the shipping. They want the dealers to do that. Right now, we can fill every order that comes across our desk. If we don't have it, we're going to tell you when it's coming in, and that's the end of the story. But if you want a specific product, come to us. Again, every customer that's been buying product in Questrade, in the registered account, TFSA, everything that's to do with registered, all their orders are being filled at Questrade.
This is why, Paul, I'm so happy that you're on the show. I mean, we're called Guildhall Wealth Management for a reason. Management is this, what's going on behind the scenes that you listeners are hearing about, but you really need to understand what's going on behind the scenes. There's FX, there's shortages, and this is why this is the moment of decision. You've been waiting for a very, very long time, especially if you haven't purchased before. Don't miss this opportunity. Get it while you can. Be thankful for what we do have in availability. This is your moment. This is the best time to be buying.
The number 1-877-8-SILVER, the website guildhallwealth.com. Thank you, guys. Thank you to the listeners. Thank you for listening to us over the last decade plus. We're going to continue to be here. We're excited about what's happening in the market. Thank you, Paul, for joining, and can't wait to speak to everyone next week here on The Real Money Show on Global News Radio, 640 Toronto.